U.S. stock futures lower after weekly gains on Wall Street as President Donald Trump threatened to impose retaliatory tariffs on Colombia. Investors turn cautious ahead of the Federal Reserve interest rate decision and inflation reading due later this week. Asian markets start the day with a modest gain. The GIFT Nifty is, however, indicating a lower start for the Indian market. Oil prices remain under pressure on President Donald Trump's repeated call for OPEC to reduce prices. Brent hovers around $77 a barrel. ICICI Bank reports a good set of Q3 earnings. Gross NPA ratio remains one of the best in 10 years, while quarterly slippages come in at 14-quarter high. JSW Steel also reacts to good earnings today as revenue and EBITDA per ton beat estimates. And in earnings today for Tata Steel, the key focus will be operational numbers. Also watch out for numbers from Coal India and ECC. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18 and I'm Vinny Motiwala. Thank you so much for tuning in this morning. But a quick look at what the Asian markets are doing. While US market handover wasn't that exciting on Friday, Asian markets today have opened up a bit with the chirpy side. When you look at the Hang Seng or the Taiwanese index, Hang Seng especially is trading with gains of 0.9% in trade. Shanghai also managing to hold on to gains of around 0.5%. ASX 200 is holding on to gains of 0.4%. The one that is not trading well is the Nikkei, that's trading with cuts of around 0.5% in trade. So yes, a lot of important data points will be coming out this week on the Asian market front as well. Keep an eye out on all of that. But today, as of now, Asian markets slight bit positive. Let's pull up the Nifty implied open, because that's not indicating a similar start what the Asian market has gotten right now. Nifty implied open is down 175 points. So that is indicating a bit of a negative start, actually a negative start that we're watching out for in terms of the Indian markets. Maybe a fall is what we're watching out for at the start of the day. But let's look at what the US markets did on Friday. Now, Wall Street ended Friday's trading session lower. Now, they were snapping its 4-day winning streak. When you look at the Dow Jones, that slipped 140 points, while S&P 500 lost around 17 points. And this is after hitting those new record high levels. Also looking at the tech-heavy Nasdaq, that ended close to 100 points lower. Now, all these three major averages posted their second straight positive week. The S&P 500 as well as the Nasdaq for the week rose by around 1.7%, while the Dow climbed 2.2%. Let's go across to CNBC's Peeper Stevens, who's getting us a wrap on all that happened on Wall Street.
U.S. markets were down across the major indexes in Friday trading as investors took profits after a strong start to corporate earnings season. The Dow slipping 141 points, the S&P fell 17 points, and the tech-heavy Nasdaq shedding 99 points. Meta CEO Mark Zuckerberg announced Friday that the company plans to invest $60 to $65 billion this year to build out its AI infrastructure, calling it a defining year for AI. Included in that investment is a large data center in Louisiana that Zuckerberg says is so big it would cover, quote, a significant part of Manhattan. He also said the company has the capital to keep investing in the years ahead. And Target became the latest big company to walk away from its diversity, equity, and inclusion efforts, joining the likes of Meta, Walmart, and McDonald's. In a memo to employees, Target announced it will end its 3-year DEI goals, stop reporting to external groups, including the Human Rights Campaign, and stop a program focused on carrying products from minority-owned businesses. The decision comes a day after Costco shareholders voted overwhelmingly to keep its DEI policies in place. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. And staying with Wall Street, let's also listen in to the former president and CEO at the Kansas City Federal Reserve, Esther George, as she talks about the independency of the Fed and whether Trump's recent actions can have any impact on the central bank.
I think this posture is not a new one, and certainly not for the Fed, that there is a prodding to move rates lower. And in fact, the Fed, as you know, has been moving rates lower. There's been a significant drop in rates over the last few months, but to the point of what an impact that has on the Fed. As many others have noted on this program, the Fed was designed to have some political insulation around this so that it can make its decisions consistent with the mandate that Congress gave it, and as you often hear the chairman say, in service to the American public.
Okay, that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, as well as tell you which are the important stocks to watch out for. Let's start off first with you, Vivek. Good morning. And, what are we watching out for in important cues from the market today?
Well, good morning. Well, when you're talking about how exactly markets have panned out, India continues to underperform other emerging market indices, and in fact, equity markets in India have underperformed quite significantly, especially in the last 2 to 3 trading weeks. Talking about the handover that we've received, all key indices as far as US was concerned actually managed to end last Friday or last week as the second straight positive week. But on the other hand, Indian markets underperform, and we continue to see another weekly decline. Oil prices continue to go ahead and see another weekly fall. Brent now hovering around the $78.50 a barrel mark. Indian markets last week gave negative return for the third consecutive week. The realty index, remember, was one of the top laggards as far as last week was concerned. Friday's session, again, you saw a bit of green, but markets failed to hold on to that particular green and ended sharply off the session highs. Market breadth largely in favor of declines. In fact, advanced decline ratio worsened towards the end of the session at 1:4. Key results today that the street will be anticipating: Tata Steel, Coal India, IOC, IOGL, and markets, remember, will react to results that came in post-market hours on Friday as well as on the weekend. So ICICI Bank, NTPC, DCB Bank, some of the stocks that will see earnings reaction. GIFT Nifty indicating quite a sharp gap down start for our own markets. It will be important to see whether there could be some recovery post that muted opening.
Okay, Vivek, thank you so much for that. We'll wait out for that. After the muted opening that we're expecting, will we see a recovery? But which are the important stocks that you should be keeping on your radar today? We have Hormas joining with us for that. Good morning, Hormas.
Good morning, Winnie, and plenty of earnings reactions to watch out for. Start off with the big one, ICICI Bank. Healthy numbers. Otherwise, on the advances and the deposit front as well, asset quality was stable. And also, there was some slight pressure felt on NIMs on a year-on-year basis. The IDFC First Bank, too, the net profit halved from a year-on-year basis, but asset quality otherwise remained stable. Yes Bank will also be reacting to results where net interest income went up by 10%. Net profit, of course, on a lower base went higher. Asset quality remained stable there. Two important names to watch out for will be AU Small Finance Bank and Credit Access Grameen, because both of them have got guidance for FY25. AU Small Finance Bank now expects loan growth of 20% from 25 earlier and has raised its credit cost guidance compared to the 1.3 to 1.4% earlier. It says that the MFI credit costs will be higher for the next couple of quarters, and the FY26 guidance is suspended because of the uncertain macro environment. Credit Access Grameen too has cut guidance for the second quarter in a row. It now expects loan growth of 7 to 8% from 8 to 12 earlier. The credit cost guidance has been raised, while the ROA and the ROE guidance both have been cut compared to the previous ones. Earnings reactions also come from stocks like JSW Steel, Indigo, DLF, Torrent Pharma. So there are plenty of broader market names to watch out for in terms of earnings reactions. There is also an open offer drama with regards to Religare, where an investor called Digvijay Gaikwad has upgraded his open offer for a 55% stake, and that is now for a 275 rupee per share open offer compared to the Burman family stake offer of 235. And Burman family in response has said that the Gaikwad faction missed the 15-day deadline to make a competing offer, and it lacks substance with regards to sourcing of funds or the capacity to purchase the shares. Keep an eye out on Adani Power as well, because the board meeting on the 29th to enhance its fundraising limits via NCDs and also consider an additional fundraising worth 5,000 crores via QIP and other methods. And Masgao Dock, of course, because the Defense Ministry has found that joint bid with ThyssenKrupp and Marine Systems to be compliant for 6 conventional submarines.
Okay, Hormas, thank you so much for that. But finally, we also have Sudarshan, who's here to tell us which are the important cues from the FNO space this morning. Good morning, Sudarshan.
Good morning, Winnie. So it was another day of big fall, especially for mid-cap index, and mid-cap index saw a fall of more than 1%. And with this, markets saw a fall for 3 consecutive sessions for the first time in 3 months. And even for today, GIFT Nifty is indicating a sharp downtick, at least for this start. And talking about the flows, FIs have sold more than rupees 2,700 crore in the cash market on Friday, but DIs have bought nearly rupees 2,400 crore. And with this, in January so far, FIs have sold more than rupees 69,000 crore, and it was offset by DIs, which have bought rupees 67,000 crore. But things are not that bad in the derivative market. In derivative market, FIs have bought rupees 300 crore on Friday, and they have increased the long positions by 6,000 contracts, and also they have reduced short positions by almost 11,845 contracts. And with this, FI's long exposure now see a minor increase to 20%, but client exposure remains healthy. It's around 71%. Talking about the option side, 23,300 call has seen addition of more than 7 lakh shares. And on the put side, 23,000 and 22,800 put have seen active additions. And with this important level for Nifty, support is now seen somewhere around 22,920 and resistance is around 23,300. Two stocks that will be in focus. First one is Laurus Labs that has seen short covering after company has reported a healthy set of earnings for Q3. And second is Prestige Estates, which saw fresh shorts, addition of fresh shorts on Friday. So keep an eye on these two stocks.
Okay, thank you so much for that, Sudarshan. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll get to what happened with ICICI Bank in Q3 numbers. It's review after the break, so stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. And let's move on to some earnings. ICICI Bank reported its Q3 numbers over the weekend. We have Abhishek joining with us to tell us what the quarter looked like. What are we expecting in terms of a move today from ICICI Bank? Good morning, Abhishek.
Good morning, Vinny. So to begin with, it was a mixed set of numbers coming in from ICICI Bank. While business momentum is weakening, the steadiness in return ratios, especially the ROA, is a key positive. So what's worked for them is that the asset quality is one of the best in last 10 years or even more. Gross NP ratio is at 1.96%. Core operating profit growth was more than 13% YOY, which is one of the best in last 5 quarters. And their operating efficiency continues to gain momentum. So cost to income ratio is at 8-quarter low. The steadiness in return ratios, that is ROA, is one of the key heartening points to see, while other peers like large caps, HDFC Bank, Kotak Bank and Axis Bank have seen decline in their return ratios or ROA, while ICICI Bank has been able to maintain it at steadiness of 2.4% plus minus 5 basis points. International net interest margin is at 4-quarter high. Now what's not worked is that the deposit growth has actually come down to 14%, one of the lowest in last 7 quarters, and loan growth at about 13.9% is one of the weakest in last 15 quarters. Retail loan growth is in single digit for the first time in last 9 quarters. Risk-weight asset to advances ratio, that's at 18-quarter high of 118% versus 160% in the previous quarter. Quarterly slippages on account of agri portfolio as well is the highest in last 14 quarters, and domestic net interest margin as a resultant of high slippages is at 10-quarter low of 4.32 versus 4.34%. With reference to the PNL, the NI is below our poll while the PAT is ahead of our poll. Back to you.
Okay, Abhishek, thank you so much for that. And post the release of the results, the MD and CEO Sandeep Bakshi addressed the media and commented about ICICI Bank's continued focus on growing profits. Listen in.
The operating environment for the banking system continues to be dynamic based on evolving global and domestic economic factors. We would continue to monitor domestic inflation, liquidity, rates, and uncertainties in the global environment. At ICICI Bank, our strategic focus continues to be on growing profit before tax, excluding treasury, through the 360-degree customer-centric approach and by serving opportunities across ecosystems and micro markets.
Okay, on that note, we're going to slip into a very short break, but don't go anywhere. After the break, we'll get to what's happening in the world of commodities, so stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18, and let's go across to Manisha Gupta, who's standing by to tell us what's happening in the world of commodities this morning. Good morning, Manisha.
Hi, Vinny. Thank you for that. Well, I'll start with the crude oil prices, which have slipped nearly a percentage point in the Asian markets right now. And this is after falling 3% in the previous week. Well, much of this decline really comes in from U.S. statements and U.S. plans and measures on increasing production going forward. Well, U.S. has asked OPEC to reduce prices. U.S. also has announced measures to boost U.S. oil and gas output. And then U.S. also has imposed retaliatory measures on Colombia. So all of that really weighing onto the markets right now. If you look at the metal as a prices, we've seen a bit of a decline here as well, even as the dollar index has declined. But the markets are very uncertain on how the U.S. could proceed when it comes to tariffs. So you have the zinc prices, which are trading at a 19-week highs. Copper prices gained last week, especially on Friday, but they're trading at a one-week lows right now as well. So one thing that has continued to stay strong is the precious metal prices. Silver is trading at a 6-week highs, and gold prices not too far away from its all-time highs.
Okay, Manisha, thank you so much for that. Surely keeping an eye out on crude as well as silver and gold prices. But on that note, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, we're Bazaar Morning Call.